All right. Good morning, traders. Can you guys hear me? Give me just a little chat. Akita said you can hear me. Okay, great. You can hear me. Chat. Test. 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 Mark. Yep. Okay. Good. All right. Thank you, everybody. I'm good now. I just wanted to make sure everybody could hear me. Dale's out today, and if you guys don't remember, he's having like some a personal thing, uh, just like a procedure he had to get done. He was just doing it this week, taking advantage of the short week, which makes sense. And so he's going to be out. He'll be back next Monday, so after the holiday. So just letting you guys know, it's nothing severe, nothing like that anybody has to worry about. He's just going to be out for the remainder of the week, which today happens to be month and quarter end. So let me take a moment and speak a little bit about what just happened. If you guys are just following along, I mean, I was sitting here alongside a lot of you. I was just sitting here going, what the hell is happening? It was just the market started to spike higher, and you can see the S&P started to rip up, and you can notice how we've given back all these gains. I'm just going to talk a little bit about what had happened, because I was sitting here watching, like, JP Morgan, and all of a sudden the numbers started flickering all over the place. I was like, what the hell's going on? Dollar Canadian dropped like 15 pips. Just you saw little bits of little moves all over the place. Anyway, the what happened is that there was news about this Innovo, phase one trial vaccine. I'm gonna just say this, even before you get into, oh, well, is it the vaccine good, or is it? Let's just remember that anything that comes out in phase one, phase two trial, any type of optimism that you get, I'm just going to give you my personal opinion, should probably be faded. All right, and let me tell you the reason why. Because if you heard, if you were like tuning into Dr. Fauci, right, over the weekend, and listening into Dr. Fauci, it was really interesting. He was asked, because I think it was Friday, where they did he's the leading infectious expert here in the United States. Most of you know who he is because of the publicity he's gained because of the Trump administration, and it seems to be the only medical expert that us as Americans actually trust. So if you listen to him over the weekend or on Friday, he's like, he got asked about herd immunity. He goes, the chances of us reaching herd immunity initially, could be, I think he said something like 12 to 18 months, even after following a vaccine. The reason why is that most people, and I know many people that fall into this category, aren't just going to blindly take some sort of vaccine as it is. All right. And so, until it's been proven, it's probably, I'm talking like a year or 2 year. I think the most important thing right now is therapeutics, is and that's when you go to like that remdesivir or whatever that is, that's like, okay, it doesn't really prevent you from getting on the deathbed. It might be the recovery from the deathbed that you happen to avoid the deathbed. But the fact of the matter is, and the point I just want to bring up is that any type of like any type of vaccine news at this stage in the game, unless it's like, oh, we're reaching phase three trials, and we've had, you're following like a company and their progress, over the next few months, and it looks like, promising going into the final trials, then that might be something different. But these phase one trial, anything that you see like that, it should probably be faded. And like I said, the chances of us, once you get a vaccine, the chances of us reaching herd immunity is not good for a while. All right. And I'm not saying that vaccines aren't going to be great. I think more of the therapeutics are going to be great, are going to be what's going to make the difference moving forward, over the next 6 months. It's going to be like, okay, I've got COVID. I'm starting to feel severe symptoms. and there's a therapeutic that I can take, like a Z pack, or something of that nature, where it has a good chance of diminishing the severe effects of COVID. And that's what I think is more needed than anything. You know what I mean? It's not it's that type of thing. Anyway, all right, enough about that. I just wanted to show what this silly news that came out. It immediately faded, and hopefully you just don't get caught in any of those. Okay, let's talk about the market. We're dealing with month end, and the euro dollar. I was just telling the guys and gals in our forex analytics chat room. I was saying that I think we're going to see 111.50 today, which looks like we're on our way. Because what I was looking at specifically was this. You can see how the euro dollar is starting to breach through that support, and it looks like that we're going to get dollar buying going into month end. That's what here. Let me just uh, share with you guys, like like for example, I'm reading um, oops, like data from Nomura, from Goldman, from Citi. But I just want to let you know, I shared it all with the guys and gals in the chat room. I'm just reading up on month end. I'm expecting some dollar strength to come through but that doesn't mean that I necessarily want to be long dollars right now. What I'd rather do is actually be long the euro. But the fact of the matter is if we could get a drop in the euro dollar down towards 111.50, I think that's going to be an opportunity to be on the long side. And this is something that you've heard me talking about for 2 weeks, so it's not anything that's new here. But um, the what I'm actually looking for at this stage in the game is just to see us break through these lows. See this support. Let me actually highlight that in a different color and make it a little wider. So let's see. Let's make that green, and let's make that big old fat green trend line so you can kind of see what we're dealing with. Okay, so what I'd love to see the euro dollar come through here, break through the support, right? Trip all the stops below these lows. See this 38% retracement, and see this breakout point right here. I'd love to see us break through this support, trip everybody's stops, and then turn around and get long the euro right down here at 111.30 to 111.50. That's what I'm hoping happens today. And if we're lucky with the end of quarter, end of month flows that we're seeing, if we do get some dollar buying going into this end of month, end of quarter, you might be able to have an opportunity to buy the euro dollar after all the flows are over. So that could mean a couple of things for you. So if you're trading the euro dollar right now, hey, you know, as long as we break this trend line here, or let me go back, move this over. Okay. So as we're breaking through this trend line, you could be on the short side of the euro if you want. If you want to try to play this, the euro on the short side, because maybe we'll get even luckier than this. Maybe if you're on the short side, it gets you down to 111, as maybe the flows are bigger than most people expect. But you drop through this support, and maybe we even trade down towards 111, quite possible, right? But you just have to be aware that once these flows dry up at the end of the day, whether it's as Europe is closing, or maybe even as the US closes, that you probably want to be a little counter trend move, look for a counter trend move. And that's what I'm personally looking for. So you can play it, on both sides if you want to, if that's your game and that's how you want to trade it. Now, let's talk about the cable a little bit here too. So the pound is, trading down towards the trend lows. And if you've heard my analysis, or you've read the analysis on Forex Analytics over the last, here's yesterday, the 78% retracement of the May low to June high comes in at 122.33 level, which may offer support near term for the pair. Okay, I still believe that this is support down here. Okay. Can we probe past it? Sure. I mean, especially if the euro, drops to 111.50, I'm assuming the cable would probably test these lows probably around 122. We'd probably break through the support, just like the euro breaking through some of the horizontal support. The pound probably would too, just to trip some stops, right? But the point I'm trying to make here is I think that we're going to get dollar strength going into today. Will it give you opportunities later today to jump in counter trend? I think so. Okay, let's take a look at the Aussie. So the Aussie, it's already probing triangle support. See this, right? It's already probing triangle support. It's already been doing it overnight, even following the China PMI numbers overnight. But what we're looking, what I'm looking for here is if the dollar continues to gain strength, then we're going to break through this triangle, and then we're going to test either that support right there or this support right over here. So, we're going to be going something like this. Okay, as we break through the triangle. Now, here's the difference, and here's the difference between what you're seeing in the euro and what you're seeing in the Aussie. If the Aussie actually breaks down, and here and this is where the difference, you can actually see it in the euro and the Aussie. The euro, I think the downside is fairly limited because we're in a flag. The Aussie downside could be a little bit greater because we come out of a triangle. So what does that mean to you? Gavin, look at Gavin, look at the big brains on Gavin. Good job. He's like long the euro Aussie. Yeah. So the euro Aussie, in my opinion, and now just so you guys know, I'm still long some euro Aussie. I'm actually, I keep shaving off a little as we approach 164, and then I keep buying it on dips, but I haven't added back yet since I was expecting a little bit move lower towards 162.50. But I might not get my opportunity. I might have to just chase it higher. But what I'm looking for is now that we're kind of out of this. Excuse me. Sorry, guys. It hurts getting up at 3 o'clock in the morning every morning. Anyway, now that we've popped out of this channel, right? I think that we're gonna be making our way higher. But you can, like I said, you can see it in the euro and you can see it in the Aussie. I mean, if the euro is just playing out a flag and we're still in the flag, but the Aussie is coming out of a triangle, that means the euro Aussie is going to eventually break higher. Now, I'm not going to be adding the euro Aussie right now with that assumption, but I've already been leaning that it's going to be an upside break. So now it's like, okay, now that we have to clear on a closing basis above 164.50, and then I'm going to be adding the euro Aussie, and then we get above 166, then you add really aggressively there, because then you're going to get a massive squeeze. But anyway, so yeah, that's exactly what I was thinking, Gavin. So good job. All right, so there was the Aussie. Going back to the Aussie. So yeah, the Aussies, if we come out of this triangle, I think the Aussie could really be looking at something more than that, like that. But what we have to see in order for that to happen is we've got to see more downside in equities. We have to see equities really sell off. And I don't know if that's necessarily going to happen today. But that could, happen going into, following the after month end, quarter end. Let's take a look at the Kiwi. Kiwi is a very similar situation to the Aussie. You see this really massive support. We're just kind of probing it. And, if we break through this 6380, I know I've been referencing 6380 a lot. I feel like I'm referencing it a lot more than what you hear. That's just because it's been every day my analysis on Forex analytics at the end of the day throughout the course of the week. And if you guys don't know this, for those of you that our Forex Analytics subscribers, I do the analysis on all of these instruments on basic technical analysis every night. Now, during the day, you can see like these Asian session updates, intraday updates, those are from me, Steve, Amanda, Paul Franco, the team. But at the end of the day, I do analysis on all of these instruments every evening throughout the course of the week. So the reason why I'm when I reference the Kiwi and I'm like, yeah, it feels like I've been looking at the 6380 forever. It's not that you may hear it from me on this webinar, but I type it every single day, and I have been for weeks. But this is really key, because if we break through 6380, then we should challenge the 38% retracement quickly after. And I mean, you can see the importance of it even today. I mean, today we dipped to 63.85 and then we bounced 30 pips, right? It's very important, because if we do clear it, it's going to start tripping some stops, right? And whether that takes us down to 38% retracement or maybe even lower than that, towards the 50% retracement, is to be seen. And it's not, I'm not here to figure out exactly how far it would drop. I have to actually see what's happening from a correlation standpoint in other asset classes to make that determination at that time. All I can say is, yeah, we cracked through the support and it's going to bring some downside pressure. How far we go really it's more determined on what's happening as a result. Does that make sense? It's not, for me to try to figure that out right now. I can't. All I know is that's really key support, and that breaks. And so why do I think that is even possible, that we break through that support? Well, the reason why I think it's possible, look at like some of these emerging market currencies. Look at this is the dollar mex. Look at the dollar Mexican peso. The dollar Mexican peso is not higher because it believes that stocks are moving higher. The Mexican peso, or this emerging market currency, is suggesting that risk aversion is probably going to be more of a theme. Whether it's today or tomorrow, probably have to get past today. It's telling you that this market's starting to get a little concerned. It's not just the dollar mex. I mean, look at the rand. Okay. The lira. I don't even pay attention to the lira as much. But look at like the rand. Look at the ruble, right? These emerging market currencies getting smashed like what you're seeing right now tells me that the market's a little bit, the underlying pressure of the market is a little bit weaker than maybe what you see or what you perceive to see. I mean, you look at the stock market, you're like, well, the stock market is holding up pretty well. Well, I mean, we're still in a triangle. We're not too far off of highs. Everything looks good. No, when you see those emerging market currencies under pressure the way they are, that actually suggests to me that the risk right now is that we break lower. Is it a trigger for me to start just shorting S&Ps right now? No, I mean, no. But I'm in my mind, I'm already leaning that way. Does it make sense? So anyway, but yeah, I mean, I've been bullish dollar Mexican peso for, ever since we were down here. So but now it's really showing its true colors as we're punching out of this, bullish flag. Okay. All right. Let me stop for a moment. I'll go back to the S&P. Let me stop for a moment and talk a little bit about the dollar yen. So I'm going to reiterate something that I said on the week ahead video, and I said it yesterday too. And remember yesterday we hadn't broke this. Whoops, we hadn't broke this 38% retracement before the face webinar yesterday. We were down here, and I was telling you guys my outlook on the dollar yen. hey, we break the 38% retracement. It's bullish. Just technically, it's bullish, and it is. We broke out. We held the breakout point. I mean, if you guys, I mean, I'm not interested in trading the dollar yen right now, but I gave you guys the pathway yesterday to do it. If you go back and listen to yesterday's webinar, I said, hey, if we break the 38% retracement, it's bullish. So you play it long, play the retest, and then you get long again. I mean, that is about as textbook gets. And if you just listen to what I said yesterday, and because the dollar yen was on your radar, you should have been able to play it perfectly, right? But let me reiterate what I said yesterday. The dollar yen, to me, is not trading off of. It's hard to gauge what it's trading off of. It's not trading on yields. It's not trading on risk aversion, risk appetite. We're not looking at bonds anymore. Yet last week it was trading on a lot of M&A news. So don't try to beat yourself up trying to figure out what it's going to do. Just play it on a technical basis. That's what I was telling you yesterday, right? As you broke the 38% retracement, just play it on the long side, because then it's giving you an opportunity that it's probably going to reach up towards the 50% or the 618, which it has. All right. But I'm just going to say it again. When I trade things, I have to find, well, for me, it's technically, finding a reason to buy or sell something is great, but also being able to understand why you're doing it is equally as important to me. So when I'm trading, I like to know, all right, I'm buying or selling this asset, whatever it is, and the reasons why I'm buying it are this, that, and the other thing. Because what it is it's identifying what it's more of a risk assessment, that I have less risk trading this asset on the long side or the short side based on the information that I have in front of me. If I can't figure that out, like the dollar yen, like I don't know why I'm buying or selling it, then it becomes more of a crapshoot, and I'm not interested in that. But I know a lot of you guys don't even follow fundamentals. You just you look at technicals, and hey, that's more power to you. I mean, if ignorance is bliss. If you don't want to know why something's moving up or down and you'd rather not, fine. If that, whatever. It's your prerogative. But what I'm going to tell you is that doesn't really interest me. So since I can't figure out the dollar yen, I don't want to trade it. But if you're just trading it on a technical basis, yeah, this is it. Hey, while we're above here, don't be short. Target here or target here, maybe even a little bit better than that, possibly, until your relative strength intraday gets overbought. And it starts to get a little overbought and divergent, then stop buying. Okay. So just giving you some quick analysis on the dollar yen, because it's playing it perfectly into the technical handbook, regardless of it moving for God knows why the hell it's moving. Okay. All right. Let me see. Last thing I'm going to go over, and then Steve's going to be here, so I'm going to be passing it over to Steve here in just a few minutes. But let me talk a little bit about the S&P. So the S&P is in a triangle. On Sunday, on the week ahead video, for those of you that don't listen in normally, I talked about the S&P going into a consolidation this week. We are. And we continue to do so, which is great, because it may not be great right at this moment, because you might be thinking, wow, this is so frustrating because the market's just not doing anything. But the fact of the matter is it's giving us a very clear direction of a breakout here in the next couple of days. And I just got this piece from a JP Morgan bull versus bear argument, which is it's a huge email. It's like, it's like 40 pages or some crap. And I tried to read parts of it this morning, but it's really good. The thing is they've got a bullish argument to 3,400 or a bearish argument to 2,700. You kind of, they're kind of giving you here's the case for a move to, for year end, a move to here or a move to here by year end. That's basically their argument. And the fact of the matter is you're looking at the S&P right now, and you've got this tight consolidation. When we break out above 3,100 or we break down below 3,000, it's probably going to fulfill one of those two arguments. We are probably going to move to 3,400 on a break above 3,100, and a break below 3,000, we're probably moving to 2,700. I've been in the camp, if you have been paying any attention for the last 3 months, I've been in the camp that we're doing this. I think the worries about the elections and COVID and the sputtering of the reopening is going to lead us this direction. But it doesn't make me right or wrong. It just it's just an opinion. But the great thing about being a trader is my opinions can change. And nothing changes opinions more than price action, right? So if we break above the 3,100, my argument's going to have to be, shit, we're going higher. And why are we going higher? Well, I guess 20 times earnings per share multiple is perfectly okay in this environment. And whatever else, I'll have come up with other arguments. But
more than 20, more like 25.
What's that, Steve?
I think more like 25.
Yeah, whatever I think we're at like 21 right now. But anyway,
22 or whatever. Yeah, we were at 18 pre-COVID.
Yeah, let's why not? Hey, I told you my nephew at 20 years old, he's making $700 a week. He's 20 years old. He's never had he was bussing at a pizza joint, a pizza restaurant.
Have I told you the funniest story of all?
What?
Let me tell you one of the funniest story of all, which shows how indiscriminate and damaging to the economy all this money going around without even putting criteria in places. One of my best friends is a psychiatrist, so his father is a psychiatrist as well. He spent like almost 10 years in the US in the 70s. So he decided when his wife was pregnant both times, because he has two kids, one is my friend and the other one is his sister, he decided that it's a good idea to get his wife in the US so she can give birth there, so the kids can also have the a US passport. And he knew the doctors there because they were working together, etc. So that's exactly what he did. He also had one of his best friends being a gynecologist in New York, actually. So he is the one that did the whole thing. So both the kids have a US passport. Of course, they've never worked in the US. They've only visited, for like vacations and trips like that. So one of them is like making good money working in Switzerland as a doctor. The other one is a lawyer, which is also doing well. They both received stimulus checks from the US government. They have never contributed a single dollar of taxes in the US. They've never worked there. They never intend to work there, but they got stimulus checks in the mail.
That's crazy.
$1,200, dude. Yes.
That's nuts. Hey, oh, by the way, we have Canadian GDP here in just about 30 seconds, but that's crazy, right? It's like, it's nuts.
Yeah.
It's nuts. It's nuts. Anyway, we have this Canadian GDP coming out, and by the way, the dollar Canadian's held up pretty well, and for those you guys know in the chat room, I'm pretty bullish the dollar Canadian. I think we're going higher here, but we're going to find out what Canadian GDP gives us here in a minute. It may move the needle, but probably not a whole lot. I think end of month and a quarter is going to be more important right now. So
minus
just
11.6.
yeah, I mean it's better than expected. It's not
Yeah.
moving the, huh?
Still horrible. I mean, yeah, it's better than expected, but still.
Yeah, it's. I think people probably expected it to be better than expected. So anyway, it's not moving the needle at all. All right, well, Steve, that's a crazy story, and oh, heck. Anyway, hey, I'm going to be passing it over to you, but I want to say, those of you guys that are listening in, thank you so much for your support. Thanks for being here. I'm going to be back on the daily roundup in 4 hours. That's for you have to be a Forex Analytics subscriber to be on that. That's where I kind of wrap up like what happened in Europe and some in North American trading, look into Asia, and kind of answer some of your questions there. And if I don't see you there, I'll see you on the Face webinar tomorrow. And just remember that the Dale is out for the remainder of the week. He'll be back on Monday. And Steve, I'm going to turn the volume down so I can interact with my office. But if you have if you need me, just ping me, okay?
Sure thing, mate. Thank
All
you.
right. All right, thanks guys. And Steve, thank you. And I think, is Stelio still tuning in from like the beach somewhere?
He's snorkeling probably or something.
Jeez. All right. We'll see you a little bit later. All right, guys.
Okay,
Thank you.
Bye bye. So, hello everybody once again. I think that Blake covered, quite a few of the things, we had to say. As he said, end of quarter, end of half a year. I'm not expecting any real fireworks. We're still seeing the same type of formations developing here, meaning consolidations having to do with risk assets, which we know that, during the past 2-3 months have been the ones that are in essence moving, every single market, including the FX markets. We have a private chat on Twitter among some friends, older people that are very good in what they do. So coincidentally or not, if 30 minutes ago, one of them was writing hey guys, can you really make money from FX? The past few days, I mean, it seems almost impossible. And which is more or less close to reality, being that as I've said for the past several weeks, currently, you like it or not, you're more or less an FX a stock trader, anyhow, a stock index trader. Even if you want to trade FX, unless you have in mind what's happening with risk, it's extremely hard to do so. Now, there is a good chance, hopefully, that new month, new quarter, new half year that are starting tomorrow are going to start bringing some direction again. So there is a good chance that we're going to finally see markets waking up and choosing a direction to at least follow for a period of time. For various reasons that we've analyzed in the recent past, I still think that from a risk reward perspective, seeing a continuation lower in risk is the likeliest scenario. The market keeps ignoring huge risks. I mean, besides the obvious issue with coronavirus, which hasn't gone away and is still affecting people's consumption, and in consumption-based economies, as the developed economies, fortunately or unfortunately, that's the name of the game. It plays a huge role, and it's what's going to make a difference. So even if we don't get lockdowns again, which I don't think we'll probably see lockdowns again, because they realize that it's extremely damaging to the economy, and it's I mean, they've already done it for a couple of months. It has already costed trillions and trillions, and I think they're going to try something else if things, if push comes to shove again. But irrespective of that, don't forget that people can self-isolate or anyhow reduce substantially the exposure they have, which of course automatically means reducing their contribution to the economy one way or another. So add to that the fact that you believe it or you don't believe it, the polls keep getting worse and worse for Trump, and which means that even if they're skewed one way or another, um, I don't think there are many people that actually believe that Trump can have like some kind of a landslide victory, which means that there is a very, very valid chance that we're going to see a Democratic president, Biden most probably in this case, obviously. And we know very well that having to do with corporate earnings, having to do with what one side has promised and what the other side has promised, there is a lot more support for corporate earnings in the case of Trump getting reelected than Biden, which necessarily means that if the market starts pricing in that, the gap between what the market is pricing in and what it will have to price in is going to be widening. And at some point that will have to be reflected. And for every month that passes and looks like Biden has a solid chance of getting elected, the higher the likelihood that the market is going to have to violently reprice that, among other things. If I think that Trump will drop out if polls don't improve, I have no idea. I mean, I have no reason to believe so. Is there a precedence for that? I don't know. I doubt that it fits his personality as well. So in general, my intuition tells me no. I don't think he's going to drop out no matter what the polls. Um, in any case. So and by the way, you don't need to comment on my comment was totally non-political, as you understand. I'm just telling you a fact having to do with the promises about corporate taxes, which are a given. I mean, they're not to be disputed, and having to do with what the polls say. Now, a lot of people will say, polls were also showing that Hillary is going to win in a landslide, and she lost, which is true. Do I believe that now that Trump is the incumbent, the polls can be that wrong once again? My personal intuition tells me that the polls cannot be that wrong again. But, we'll find out. One thing is for sure. I think it would be a wrong risk for somebody to completely dismiss them and think like they mean absolutely nothing. So I think that somebody that would be like, it's okay, I can be risk on because no matter what happens, Trump is going to win. I think, first of all, this is the wrong approach because there is a definite risk for Biden to be elected. And second of all, it doesn't even matter if Trump is going to get reelected or not until the election day, because market participants, if polls don't improve, will have to price in at least a partial possibility of a Biden presidency getting closer to the election, even if Trump ends up winning. And then the market, of course, cannot unprice that, right? So it doesn't even matter if at the end of the day the polls are going to be wrong. What matters is what the market is going to be forced to price in until the day of the election. Now, what happens following the day of the election? Of course, then the market will have, something solid to price in. So in the case it's Biden, if it hasn't completely priced that in, it will have to, price what's left of it in quite violently within the same day or like within the week. If it's Trump, then if it has priced in, at least, some possibility that Biden is going to be elected, it's going to have to unprice that in, quite immediately. So, that's the case. In any case, we know very well that dollar is going to behave accordingly. I mean, it's going to behave according to what risk is doing, because we know that risk of flows benefit the dollar, risk on flows take money out of the dollar. Okay, that has been mostly the trend, and there can be days that you see this correlation not working that well. Today, for example, is one of these days. I mean, stocks are more or less unchanged on the day. Dollar is higher though, right? But I mean, if you just have a look at the general trend, you'll see that the correlation is very tight. So I think trying to fade or trying to believe that this correlation is going to inverse is probably not such a good idea. Personally, I do believe that in the future, and probably not in the not so distant future, the dollar's behavior can actually end up changing in comparison to what it does with risk, but I don't think that we're there yet. Other things have to happen first. So I'm not in the camp that you should be looking for this correlation to just magically change from one day to the other. I think it will happen, but it will happen for a good reason, and it won't happen yet. Now, despite seeing the dollar being decently bid, no matter how much I look at this chart, I can't keep thinking that this rebound higher in the DXY looks, clearly corrective. The same applies if you look at the Euro USD, inversely, of course, meaning this pullback lower looks corrective to me. I mean, it's choppy, it's slow, it's overlapping. Just, very simply, let's consider this last leg higher in the Euro USD. That leg higher lasted 16 days, 12 trading days, if we want to talk about 12 trading days, right? So this has lasted 12 trading days, and it was worth 5% of a move higher. Now, the move to the downside, on the other hand, has lasted so far 14 trading days, and it has retraced just 1.9% of that 5% higher. So, you see how much faster we went, quite a lot higher. And, we even in more days than it took us to climb 5%, we've just retraced 1.9%. So this tells me that probably the next move for the Euro USD is going to be to the upside. Now, does this mean that it's going to happen from exactly here? No, absolutely not necessarily, right? I mean, we remain within this channel. Nobody says that we can't keep consolidating in this channel, drifting, slowly lower before we finally find a low and then move to the upside. 111.50 is definitely one area of support, but it's not the only area of support. We have this 110.80. I think that if we keep moving in the same manner to the downside, even a retest of 110, which I don't consider very likely, but even a retest of 110, if the way we will have kept moving to the downside is orderly, can still prove to be a buying opportunity. So, bottom line, I do think that dollar's next move, from what I can see on the chart at the moment, is probably going to be lower. And keep in mind, I said it yesterday again, yeah, the pound has been doing quite worse than the euro has been doing, but it's completely wrong if you believe that the euro can end up continuing to the upside and pound pushing lower. There can be periods that euro is behaving differently than the pound, or that it's depreciating less or appreciating more or whatever. But if you think that you can see these two currency pairs move inversely to each other for more than a few hours or more than a couple of days, you're totally mistaken, and you're ignoring so much price history that we have. So basically, if you see, or when you see euro finding support and moving to the upside, definitely that means that it's no longer the time that you should be short the pound, because I don't think that's going to work for you. Perhaps the euro will keep overperforming, so still being long the euro instead of the pound might be a better idea, but believing that you can be long the euro and short the pound and that they both will work is absolutely not happening. So having to do with that, I would also be quite careful. I don't think there is any risk reward anymore being short the cable here, at least not from what I'm seeing on the DXY and on the euro chart. Now, admittedly, one of the most interesting FX charts at the moment is the USD CAD, and the reason is because USD CAD is testing this channel trend line resistance. Needless to say, we've been expecting a reaction higher from the USD CAD once we started reaching, some of the downside targets from 135.50 and below. We ended up finding support at this last support resistance area, and we're now testing this resistance. I do believe that the breakout from this channel is going to be quite a bullish development, and we can see quite a lot more upside. I've kept advocating that, if you really want to be long the US dollar, against the Canadian dollar has been one of the better opportunities, because Canadian dollar is still, quite seriously underperforming other currencies against the US dollar. So, you want to be short the USD CAD, risk reward is definitely in your favor as we're now testing resistance. But, I don't think it's a good idea being short the USD CAD if we see a breakout from this channel, because I think we can squeeze, significantly higher. So, you have to keep that in mind. Now, having to do with the rest, Aussie, Kiwi, Blake more or less, said what needed to be said here. I'm still seeing consolidation, so I wouldn't rule out another move to the upside. But, given, how everything else is moving, you need to give it a little bit more time. It's at the end of the day, it's just a consolidation, right? So, it looks to me like it wants to break out to the upside eventually, but how corrective moves are. Nobody says that it can't temporarily break to the downside before it moves higher once again. So, be a little bit careful here. And as I said, especially having to do with commodity currencies, it all depends on what happens with risk. And somebody making assumptions what will happen with risk here, since even from a technical perspective, we are in some type of a consolidation is very tough to do. I mean, we might just move higher straight from here, from this triangle, in which case I will be looking for one more push to the upside before a deeper correction, or we might just be consolidating this first move lower and produce at least one more towards 2800. I'm still short. So, from a personal perspective, I still favor the downside here. So I do have exposure and I do have a personal preference. But, I'm not blind. So I can't tell you that it's a slam dunk. I can't tell you that it's like one of the cleanest setups I've seen. It definitely isn't. I mean, the only argument for upside is monetary stimulus and orchestrated central bank intervention. But that's the environment that we currently have. So you can't ignore it just because you don't like it. I don't like it at all. I'm an Austrian economist. I mean, I believe in Austrian economics. I believe in sound money. I believe that what's been happening during the last 20 years having to do with fiscal irresponsibility and monetary lunacy is going to be extremely hurtful in the long term to the global economy. And I think there is going to be the vast majority of the people are going to end up suffering because of that on multiple levels. But that doesn't change the fact that it's a policy that is working in the direction of supporting asset prices. So that's also a given, which means that, that's the fundamental backdrop, because intervention is part of that fundamental backdrop. And you have to take into account that, that's a good possibility. I mean, if that wasn't the case, stocks would be a lot lower than they currently are. So go figure. And it's a very hard game trying to find the actual equilibrium by putting in the equation something that is not easily quantifiable. Let me go through some of your questions. That's a good question, Gregorio. Ciao, Steve. Are you saying that we have already seen the top in the DXY? I'm not necessarily saying that. So I'm not necessarily saying that, and I'll tell you why I'm not necessarily saying that. Because this is a triangle, and triangles are not wave twos. So my answer is more of an Elliott wave answer. So I'll tell you something. just by zooming out in this chart, and let's focus on price action since the beginning of 2019, let's say. So let's take the last 1.5 years. I mean, let me draw on this chart. Let me annotate to be exact. So let's use this color. So let's take the last 1.5 years. This is what you have. There is no trend here. Okay. Now, I'm a big advocate that the dollar is going to get decimated eventually, and eventually not being that far off. I mean, might be in a year, might be in 2 years. I don't think it's going to take more than that. But there's no trend here. Who tells me that something like that can happen first? I mean, I've seen a lot more illogical stuff. So I can tell you that in the short term, I'm seeing this rebound, and it tells me that the next move is probably lower. Now, is there anything that tells me that the next move can't be lower up to this support area, then higher, then getting the dollar decimated? No. So, my answer is I think there is a very good chance that the next move for the dollar is going to be lower, the next rather shorter move. And I'm not saying 1 or 2 days, because during the next just few days, the move might be higher. But I think, during the next few weeks, we're going to see another leg lower in the dollar. I also strongly believe that the long-term move for the dollar is going to be to the downside. So the question mark that remains in my mind is what's going to happen in between those time frames. And I'm not sure yet. I'm not sure that we've seen that this was the high yet. I think there is a chance. There definitely is a chance, and the fundamental long-term picture would favor that this is the high. But I don't think we have like totally solid evidence yet. So I'm a little bit more skeptical. Let me delete. Clear all drawings. Good. Okay. Not that many differences, Ziggy. Quite a lot commonalities. Some differences having to do with money. I do think, though, that they have more common stuff than differences. So if you're asking, I don't think fundamentally they are so much different. At least not in the basic, not in the basic realizations for an economy. Aussie USD down, it's S&P down. Yeah, I mean that's the relationship. There is a question about the VIX, and I forgot to mention that actually. You know that VIX has many times pinpointed the right direction for stocks. That might be the case once again. I mean, we were more closely monitoring this descending wedge here in the VIX, which did create that short-term explosive move out of it. I mean, that was a massive, massive candlestick. I think that was one of the biggest upside moves that we've seen in the VIX historically. I'm seeing once again the same type of formation. I'm seeing like a consolidation, a pullback, which I think will probably once again produce the same type of a move. So, we might temporarily keep drifting lower within this like channel, but I do think that the next move out of this channel is going to be probably another explosive move to the upside. Keep in mind that there is also a good chance that it's going to be very hard for a period of time to trade stocks, because there is a chance that the final equilibrium between the two forces, meaning the real economic fundamentals, which would require much, much lower stock prices, but on the other hand, the huge amount of stimulus being thrown in the economy, that they're going to cancel each other out. And of course, that's not going to be good for us traders, because if that's the case, what might end up happening is something like this. before an eventual resolution, right? Now, technically speaking, if that's what happens, if we just end up consolidating in a rather large range, as a technical formation, that would favor an eventual resolution to the upside. The problem is that this is a process that might take a long time, which means that people are going to be trying, and we've seen that happen in the past in various instruments, is that this might be a period that people are going to be trying to find trend in every sharp move that they see on the chart, and they might get disappointed again and again and again, because bears, for example, might see like a big move, like this one big candlestick that we had with the downside, expect that there's naturally going to be continuation, and not find enough continuation. Bulls, on the other hand, might keep getting elated by the fact that bears don't manage to get control of the trend, so they're going to get to the woodshed once again. But bulls might start getting frustrated as well, because every time they see the index finding support, they might not see the continuation they want to the upside. And let's hope that's not the case, because if that ends up being the case, trust me, it's not that you're going to find many things in FX that are going to give you great trading opportunities. So keep in mind that there is always the chance that we're going to go through a period of time that trading is going to be extremely frustrating, because there's going to be a lot of false starts in both directions. If you want a real example from the markets, there is no better to see than, guess what? USD yen. I mean, how many false starts have we had since February that, this long-term triangle is finally getting resolved in one direction or the other, and every time it's been false hope. So imagine something like that happening in the S&P. It's going to be really, really nasty, because FX is going to be following the same type of, rhythm. It's going to be producing some moves that look, like the beginning of an impulsive move, and then it's going to be grinding to a halt, then consolidating, then perhaps reversing, giving some hope that it's going to be moving the other direction, rinse and repeat. That's going to be horrible. A lot of people end up losing their money under such an environment. And not only you lose your money, but you lose your money. It's like, death by 1,000 cuts. You keep losing your money a little bit every time, because you try to follow a developing trend which isn't a developing trend, and again and again and again and again. Anyhow, that's just a possibility. It doesn't mean that's going to happen. Let's hope it doesn't. For the time being, today is an important day for the reasons we mentioned. It's end of quarter, it's end of half year, and we've seen very, very frequently new trends emerging when a new period is beginning. Money has to find a place, a position once again. That on itself can create new trends. Let's hope that's the case. So Thursday we also have a lot of data coming out. So the combination that today we have the last day, and Thursday, quite important data coming out. Let's see. Perhaps this week proves to be quite an interesting one, and proves to be the beginning of something different. EA has been lagging to the VIX also, so the catch-up itself could be a nice move. Yeah, Euro Aussie, by EA he means Euro Aussie. Euro Aussie is threatening again and again a breakout from this descending channel. You can see it here. Unfortunately, it's not actually happening, right? By the way, we have Chicago PMI in 45 minutes. Just keep that in mind. I don't see anything really big other than that. Expectations are for a 45. The previous reading was at 32.3. So EA testing resistance, unable to break yet. Euro Kiwi quite close to the equivalent channels, trendline resistance. And yes, they're both going to break out to the upside if we see risk off. But, that's an assumption that needs to prove to be the case first. Trump supporters don't believe polls because of the last election. Yes, but I think it's not the same as I said. So is this recovery now M-shaped with Biden ahead, rallying fangs, halted, etc.? Dillian, it's too early to say. It's too early to say. That's the problem. It's too early to say. Now, that's a good question. Are you saying with Trump elected, the dollar will go up and the reverse down? Listen, let me be very, very clear. I think that the dollar within the next presidential period, within the next 4 years, is going to go down irrespective of who is the president. The only difference is going to be what's going to happen in the very first period of the new president. I think that who gets elected can affect what happens to the dollar in the following period to that. But during the 4 years of presidency, I think that the fate of the dollar is going to be more or less the same. Being the Trump getting reelected or Biden taking over. My thoughts on Europound. Yeah, my thoughts on Europound are very simple. I think that there is no more risk reward to be long the Europound. I think that this move was quite nice. It almost made it to the 61.8 yesterday. The uptrend has not yet been invalidated because we're trading within this channel, but that doesn't change the fact that we've completed one extension higher after we broke the first rectangle, second extension higher after we broke through the second. I think that there is no risk reward in being long anymore. That doesn't mean that the euro pound can't move higher from here once again, but I think that the easy move higher has already been done. So I'm not sure if it's going to reverse from here or if it will want to do that from a little bit higher towards 93. But I'm pretty sure that the next decent move is going to be to the downside. So that's what I think about the euro pound. You had two opportunities to trade to the long side, three actually, because you could have traded the double bottom as well. So one here, one there, one there, and in between the retests of this previous resistance and support. But I think this is not the direction you should be looking towards any more. Thank you, Pete. USD is holding a triangle on the monthly, has to close out of it on a monthly basis to confirm, says Dillian, and I agree with you. But in shorter time frames like the weekly and the daily, it has been fooling people again and again. What do you make of gold? What I believe about gold is that it's still climbing a wall of worry. I believe that the fundamental backdrop is ideal for precious metals. I think that it's holding up quite nicely, and I think that it's a very bad idea to try to fade it. Yeah, it's not going to move to the upside indefinitely. It will have to produce corrective moves to the downside. But I think until something really changes, the only direction you want to be trading it is to the upside. So instead of trying to fade moves to the downside, it's better just to take profits and buy again lower. In this case, I see the next upside target being 1791 and 1823 above that, and I see support being at 1740. And as long as we are above 1740, there is absolutely no technical basis for which you should be looking lower. That's what I think about gold. Did you notice natural gas? Yes, I mentioned natural gas yesterday again. And last week, as I was saying yesterday, I answered somebody that sent me an email about that, told him that it's currently testing important support. Just look at it. Once again, we're holding this range. So, we're still trapped in this 152, 205 range, fading, tests of support or resistance is the way to go until we finally see a breakout. And especially I favor a breakout to the upside, which is eventually is going to happen. I think you should not try to fade a breakout to the upside, because I think that whenever natural gas finally breaks out decisively above 205, it's not going to stop. I think that it's going to extend towards $2.50 at the very least. So that's what I think about natural gas. Alexander, the answer is yes. The answer is mixed actually, because I now see the rest of your question. There are trades that we write about on the chat room, mostly shorter term trades, and there are trades that we publicize in our active patterns in play on the site. So, those are more like medium term trades. So some of them go up on the active patterns in play on our website. Shorter term trades and ideas are being shared in the chat room. So mixed bag. Okay. Yeah. My pleasure. Questions about Nifty, INR. Yes, Simon, we do, in essence, post trades about FX. Hi, Steve. The Fed's free money is pumping up assets prices for sure. What do you think for FTSE 100? What I think about FTSE 100 before I go to the Steve, copper looks overdone. Yes, it is overdone for the time being. I agree with you, and it should produce some type of a pullback sooner rather than later. Exactly what I said about the euro pound applies to copper. If you see they even have similar formations, I'm not implying that they're correlated or they have similar characteristics, so don't misinterpret me. I'm just saying that currently the formation they've built looks quite equivalent. So yes, I think the easy move higher in copper has already been done. In order for me to join the uptrend, I would definitely want to see a deeper pullback. So I agree with you. What was the question? Yeah, the FTSE. Yeah, I'm going to cover all your questions, so don't worry about it. So I have to tell you about the FTSE that I do believe that it's one of the weakest indices, right? I mean, just compare the rebound in the FTSE in comparison to the S&P, for example, which is the global barometer for risk. So you see that there's a huge difference in the extent of the rebound. So I have to tell you that FTSE doesn't look that healthy to me. Now, I'm not saying that it can't keep rebounding, but I would be paying close attention to this formation. And I think that if we, or when we eventually break down from it, I think that, FTSE is going to extend lower. So that's what I think about it. Hi, Steve. I want your idea on USD TRY, as this pair has a range of 5 to 5.3 as a restriction in Turkey, 685 to 707 for the last few months. I think that the USD Turkish lira might produce another leg to the downside in the short term. But I think that Turkey has a huge, huge problem with its economy. And it also has the problem that it has limited reserves. And that makes it a very dangerous thesis to try to be in favor of the Turkish lira. So in the short term, we might see something like this. But fundamentally speaking, I don't yet see any sign that the Turkish economy might have reached some kind of a bottom, and to make me optimistic about it. So in the short term, being short USD Turkish lira, probably not a very bad idea. But I don't yet see the basis for a real reversal in this 12-year uptrend that we've had in the USD TRY. Okay, that's what I think about it. I'm a new trader. I have a basic technique that I'm backtesting and intend to stick with it while hopefully growing my small trading account. I've been a subscriber for a couple of months, but I don't have the premium version that includes the chat. Is there a video in the archive that advises viewers on how to trade using the technical analysis and signals that the Forex analytics team provides? Obviously, there are various ways you can use our service. And obviously, there is no guide in how you can use the chat room, because it's the general concept that by being in the chat room, you interact on a daily basis with many traders, a lot of which are very experienced. And at the very least, what you get is input from people that have more eyeballs than a single person can have. So at the very least, you come in contact with ideas that otherwise you might not have come in contact with. Now, ideally, what we want from people is to develop their own, and that requires time, obviously, right? It requires time and work. And we've explained many times that trading, whoever promises you that trading is an easy way to make a lot of money is lying because they want to take your money. What we're telling you is that trading is a job that requires investment, time investment from your side, and consistency. And at the end of the day, each person finds their own trading style that suits them. But once you get to do that, you get to benefit from being with us still, because you're not just blindly copying what we think is a good idea. You have your own ideas and you filter them through with what we think. So in essence, hopefully, we help you increase the quality of the quote unquote signals you want to be taking. Okay. I hope I described that in the proper way. Now, to finish up with the questions about the USD INR, which here it is, guess what? It remains trapped in a triangle. So there's nothing for me to say. I mean, it is what it is. This market is, refusing to do something. I think that eventually that probably favors an upside breakout before lower. So I would favor another push to the upside towards 78, 79, and before lower. But this is a consolidation, so you have to remain patient. And having to do with the Nifty that you were asking, I drew this quite some time ago and still remains valid. You can more or less view this as my viewpoint that I explained a few minutes ago on the FTSE. The Nifty looks rather weak in the way it has rebounded. So I'm assuming that the next decent move for the Nifty is going to be to the downside. Keep in mind that this 10,500, I said since the very beginning, it's a confluence of resistances. We saw a very nice initial reaction once we tested it, because the next day we produced a bearish engulfing. So against that level, definitely the risk reward seems to favor short positions. Dimitri says, hi Steve, asked you some time back, but this time with the right tickers, RNO, EDF, and Shell. Okay, let's have a look at them. RNO. Yeah, last time we looked at it, this is what I saw, and it hasn't really changed that much. I mean, nice reaction higher, definitely a bullish breakout from this formation. So, a first signal that this market is, coming back to life. So, first decent, move to the upside. You can definitely try your luck if we retest it for this area. If we retest it at support, it looks very decent, right? For at least one more move to the upside. So, I have to tell you that against 8, yeah, looks decent. I mean, at 8, you're going to be having a very nice risk reward in your favor to expect a move even towards 20, right? Now, we break below 8, it's going to start looking. Let me copy this. Yeah, this is something you should consider if we see a move below 8, right? The potential that, it's this triangle, it's this channel that got us rejected. So, we remain in this downtrend. So, not 100% evidence yet that we're moving to the upside. The 200 daily moving average and this channel are still capping. Irrespective of that, it's worth a shot at 8.1, 8.2, at least for an initial reaction higher. And when we eventually break through this channel, I think that from a technical perspective, it's going to look very, very good to the upside. What are your thoughts of stocks as Wells Fargo? Let me give you a very, very brief description of what I've already said. You also asked about EDF, by the way. Stay away from the financials. There is absolutely no winning scenario for banks. Now, that doesn't mean that banks are not going to have rebounds on occasion, but stay as far away as you can from the financials. The financials are damaged beyond repair. The current fundamental backdrop is a lose-lose situation for financials. So just don't be long financials. And, end of story. Some of them look somewhat better than the rest, but all of them look like shit. Excuse my language. Okay. EDF. EDF, I do understand why a lot of people found value at the lows. I mean, it's the power company, and it's never going to go bankrupt probably because, the state and the taxpayer is going to keep supporting it. But from a technical perspective, it doesn't look good to me. I can tell you that much. Given the impulsive move lower, the fact that we're seeing a triangle here tells me that, it might suffer a little bit more. Now, you want to buy it at a retest of this triangle. I would say something like 6.3, also previous highs there. But, I still don't see the bullish argument from a technical perspective. Now, having to do with your question about sell, okay, this is what I drew back there. As you see, the correction was a little bit more complex and it did give the ability to be long. But it has pulled back once again, and I want to see what kind of a move this is. Same happened with Total. I was long TOT, and I make some decent money out of it. Good thing that once it reversed there, I got rid of my position and my profits because I bought it when it broke out from there. I would be interested in buying TOT once again, but I'm not sure it's the time to do that yet. Okay, I can tell you that this is not easy to envision what kind of a corrective move it is. So, it's not easy to advocate to buy it right here. It might find support even here, but, from a technical perspective, it's a very, very hard call to make. So I would have to say, if you want to be on the safe side, stay away from them as well for the time being, especially, and this is a good segue because we had a question about oil. Oil has not produced a deep correction. We did see a pullback. And as far as it's not producing a deeper correction, I think that you should stay away from being long. Now, what this likely might be, is a triangle. And if that's the case, it should be resolved to the upside. But even if that's the case, I would not foresee much of an upside before I look for a deeper correction and higher. So bottom line, my previous thesis before this reversal remains. I don't think that the risk reward favors being long anymore, not until we see a deeper correction. And yes, it might happen from higher prices, but I would still maintain the perspective that being long is not a smart idea anymore. You had multiple opportunities to be long lower, but I think the easy money to the upside for the time being have already been made. And probably it's not a good idea chasing, perhaps a very last push to the upside before seeing a deeper correction. It's a much better idea buying the deeper correction when that happens. And I still favor that correction taking us back towards $29. So that's still my preferred pullback area in order for me to start looking higher. Once again, I did cover the FTSE. And that's the last question I'm going to answer about TSX for Canada. And then I'm going to the day, and we're going to speak tomorrow again during the webinar. So TSX, believe it or not, I think I've never, no, I'm mistaken actually. I've had a look in the past because obviously somebody wanted. So I saw this, from what I see, as a bullish formation that will break the upside. That happened. Okay, so let's erase all that. Let's fib this. $200 daily moving average did its trick here. As you see, I have nothing different to say than I said for the S&P. A very, very similar situation with the S&P. Both scenarios can play out, this scenario or this scenario. So not easy to judge what's happening from here. Perhaps one more move to the upside, perhaps a breakdown just from, these levels. We'll see. Keep monitoring this triangle and we'll see. But you can trust me on one thing. Whatever the S&P is going to do, this index is going to do as well. So, either you decide to trade the TSX or you decide to trade the S&P 500, I don't think you should expect something different to unfold from here. Okay, guys and girls, thank you everybody, and have a wonderful day. Stay very nimble in these markets until we see hopefully some direction in risk. Be very, very careful in overextending. Be very, very careful in over leveraging. Be very, very careful in assuming that some trend has come back in play. This is a situation that you'd rather be too careful and lose the beginning of some moves that will prove to be profitable than getting chopped up again and again until you realize that perhaps that's not the environment yet. Okay. Of course, each one has their own trading style, their own risk tolerance. So I'm just giving you my 50 cents, which is obviously influenced by my trading style. But that's the best I can do for you. So bye bye and see you tomorrow.